Hello and welcome to a brand new show of CEO at Work. And in this episode of CEO at Work, we are at the headquarters of AxisBank, a bank which has seen many twists and turns in last 1 decade, from survival to revival and now the flourish. And that in a sense is going to be the theme of today's interaction with Amitabh Chaudhry, to understand that if the worst is behind us, is the best yet to come? What are the challenges in the current era? What about the macro? What is his understanding of the US banking crisis? All that and much more with Amitabh Chaudhry in this episode of CEO at Work. So Mr. Chaudhry, thank you for inviting us.
Pleasure.
I always get this feeling of nostalgia when I come to this building.
Why?
Been here a couple of times. You know, it's a bank which in a sense has seen twists and turns and peak and troughs, from survival to revival and now flourish.
Well, since I joined the bank in November 2018, one has been trying to do exactly that. When I joined the bank, I thought it was a great platform, and I think the last 3.5 years have proved that in more ways than one. Yes, one had to do a lot of work, and there were a lot of opportunities, a lot of crisis situations also. COVID did not help. But I'm quite proud of the fact that how the AxisBank team has come so far. I think the opportunities ahead of us are even more. And as India starts flourishing as an economy, which is what everyone is predicting, I think today AxisBank has a great platform to build on that and hopefully change our ranking in not only in terms of assets, but in terms of the respect which we command in the marketplace, how much people trust us, and what impact we're able to make in the marketplace over a period of time. So looking forward to it.
So, in banking, it's all about numbers. So what is the number for Amitabh Chaudhry which he's chasing for AxisBank?
Well, I mean, when I came in, I had talked about the fact that we'll try to change our ranking. So I told you that that's what we want to move forward on. And please understand, respect does have size in it. Respect does have trust in it. Respect does have what do the customers think about you? What is the play in technology? What is the play in analytics? Are your products and services well regarded? So it's a combination and a cocktail of all these things put together. And as I said, while we have come a long way, there's still a long way to go. But the platform exists. I think we have a great team in place now. We have a clear vision in terms of where we want to get to. We had outlined our strategy, GPS, in January 2019. We have built on it. And I think the 3 vectors we're using to push our strategy is around ensuring that we drive a performance-driven culture in the organization, we strengthen the core, and build for the future. And everything which we are doing is around these 3 vectors. So I think if we can just keep executing and keep executing well, I think sky is the limit.
We are talking to you at a time when the macros, at least in the Western world, are challenging. Whether it is inflation or what is happening to commodity prices, if that was not enough, you've got a problem in US regional banking space. What to your mind is happening there? And is it like a 2008 kind of a repeat, or this is just a storm and it will also go away?
So firstly, let's accept and acknowledge the fact that the world has become very volatile. Volatile in terms of geopolitics, volatile in terms of how crisis and unintended accidents can happen suddenly. What happened with the regional banks in the US is an unintended and unexpected event that has taken place. I think the regulators have learned over a period of time some very hard lessons, that when a crisis of this kind happens, it's very, very important to react extremely quickly and use a large blunt instrument to ensure that we can take care of the crisis. You've seen that happen with the US banks. You've seen that happen with Credit Suisse. Within a matter of days, they put a UBS to come in and take it over. And I think you will see similar action happen across the world if something of this nature was to take place. So my view is that the banking system and the global regulators will be able to contain the crisis. But these unexpected accidents are today a matter of what we have to live with on a day-to-day basis. So it is about how you manage the institution. You are aware that some of these crises can happen, geopolitically, globally, and some of it can come to India. So as long as you have prepared your institution to manage some of those crises, I think you will not only tide over it, you can actually find opportunities where you can get a disproportionate market share because suddenly some opportunity came up. So that's how we are looking at it. My view is that some of these crises might continue. Like, for example, people are saying that there could be a dominoes effect of this regional banking crisis. This can then go over to a lot of money which has been raised from the marketplace for investing in real estate funds, and you've seen some run on the real estate funds. You have seen what has happened to crypto. So as people have chased with excess money, excess returns, and when these returns don't come, and if everyone is trying to escape through the same door, there is a kind of a run on financial institutions or funds, and that's why this crisis happens. So my view is that there could be more like this, but the regulators know what they're doing. I think regulators have shown how quickly they've contained the crisis, so it should be manageable. Unless there are some real shocks, oil price going haywire, unless you have a real shock in terms of something, some political person doing something stupid in another part of the world, I would say that India is uniquely placed and very well placed. I think India has balanced this geopolitical tension very, very well. Full credit to the government. I think the regulator has done a great job. So for us, it is a great time to get it right. Now, how much the GDP growth would be, how will the inflation play out, how will this excess liquidity which RBI has been slowly withdrawing, how will that be managed, what will happen to the currency rate? These are some of the factors which all of the the important players have to manage. But overall, India is very well placed, and that's why we said we are sitting on a great platform to capitalize on it.
The banking business is also about understanding growth and also about risk management. So you've spoken about risk, how well the risk is managed in India. Let's understand your outlook for the economy. So far, so good. But going forward, will the base effect kick in?
Yes, I mean, if you look at all the forecasts there, people are obviously tempering the growth rate a little bit. If the right now, obviously, all the factors seem to indicate that the GDP growth rate should be managed within the 6.5% range, lower than what was there obviously last year, given the base effect kicking in. If you look at the government is trying to push the exports also to a different level in terms of growth rate than what they what we achieved in the past. So the government is trying very hard. My view is that this GDP growth rate should be delivered, should not be a problem. Private capex is coming in, but slowly, gradually. And what happens with private capex is, whenever there is a geopolitical change or any crisis, people tend to hold back. So you are seeing the government stepping up and investing a lot of money. You are seeing the Prime Minister inaugurating some infrastructure project practically every day now across the country. So my view is, while government steps in, budget is non-inflationary, government is being careful about how it spends money and putting a lot in the right kind of infrastructure. Hopefully private capex picks up. It is picking up in some of the areas. PLS scheme should help. India is on the right path. Let's see how it plays out.
Okay, we're on the right path, but my question is that, is the peak of the best growth and profit behind us? And I'll give you, some factors here. Factor number one, interest rates sooner than later will peak out. That means peak margin expansion will not happen. Base effect somewhere will kick in. And also competition has only intensified within private banks to give loan to quality players.
So yes, I mean, you do get times when I guess the cycles do help you in expanding your margins and things of that nature. But let's also not forget the fact that in any cycle, at any point in time, if given, for example, let's take Axis as a case, our market share in deposits is close to 5%, our market share in advances is close to 6%. Should I really be worried about whether can I gain market share and can I do better than the industry? Well, if my platform is right, my strategy is right, I'm executing well, I should be able to gain market share, which should reflect in my increased profitability, which should reflect in being able to maintain margins. Now, this is subject to some number of factors I mentioned. And that's what I'm telling people within Axis, that if we have worked so hard to get the platform to this level, we should be able to, given where we are, should be able to build on it and do better than what we've done in the past. Why should I worry so much about whether 100 is going to 106.5 or is it going to 107 or 108? There is enough to be taken from 100 itself, and that's what we should be focused on.
So the basic thumb rule for Axis Bank historically has been that it's at a multiplier of 1.5. Will that be the thumb rule going forward as well?
Well, as I said, end of the day, when we talk about ranking also has somewhere market capitalization built in. So yeah, we would like ourselves to be rated at similar levels as some of my friendly banks are. We have work to do. Market needs to be convinced, and if the market is convinced, hopefully it will get re-rated on some day. I think we have to still do a lot of work, establish sustainability, more credibility, and as we do that, hopefully it will reflect in our multiples also. Till then, I have to keep working hard.
While growth is enviable right now, but the deposit growth is something which is, I won't say pathetic, but it is slightly poor. The gap between deposit growth and the credit growth, I guess, is the highest in last 10 years. Do you see that gap narrowing down, which means growth has to come down or deposits have to go up?
Well, it is narrowing down. You've already seen the credit growth come down a little bit in the last couple of quarters. We are predicting the credit growth to be in the 13 to 14% range next year. The deposit growth is obviously muted. This is not sustainable in the long run, that you have a jaw which is negative. the deposit growth should be slightly higher than the credit growth. So at some stage it has to turn. Hopefully some of the changes that are happening in the budget will support the deposit growth in the banking system. Our view is, and as you would see, while the bulk deposit rates had caught up with the increasing interest rates earlier, even the retail deposit rates, if you look at the retail deposits rates today, they've already reached the peak of the last cycle. Today, for example, AxisBank is offering for 1 year 7.26%. The peak of the last cycle was 7.3. We're already there. So I do expect that in the system it might take a couple of quarters to play out, but hopefully people will see value in putting money back into the banking system and the deposits, because some of the alternates might be as expensive or giving the similar returns as what the banking system is giving. And if it does not happen, well, at some stage the credit growth has to be tempered. There are no two ways about it. But all of us are also at the same time ensuring that we are expanding our physical infrastructure. We are spending a lot of money in digitally also, so that we can reach out to more customers. And as that happens, hopefully that will continue to give a fillip to the deposit growth. But right now, deposit growth is a problem in the system, and we do need to solve it. We need to get it back. Otherwise, at some stage, it will hit our ability to increase the credit growth.
So are you rejecting more loans and giving approvals for less loans?
We are very clear that the loan has to come at the right price and the right risk-adjusted return on capital. That's why if you look at Axis Bank's performance, you will see that on the large corporate side, our credit growth was limited because we were not getting the right price. Now, in the last couple of quarters, we've seen the price come back. You will see that our loan growth is also kind of picked up. So we are quite clear that we need to get the right return for the money we are giving out in the marketplace. That does not mean that we don't do fine pricing, but the overall mix has to make sense to us. And we have worked very hard to get our net interest margins from where they were to where we are now. We would like to maintain them in the same zone rather than just in the desire to get growth, giving it away, and unnecessarily putting pressure on ourselves. So we have created the right operating leverage. We would like to maintain it.
You did get an advantage in last 2 quarters because of the interest rate cycle. What would be the lever for Axis Bank going forward to maintain and expand margins?
Well, beyond a point, just expanding margins does not make sense. So as we have said, in the long run, we wanted our margins to be around 3.8% and above. We've already reached 4.2% if I take out the one-offs. So we are already above the zone. So I have some margin to play with. And our view is that we will work very hard to ensure that we remain in that same zone. We're not going to give that away.
The reason why it's called as a credit cycle is because there's a pattern at play. There is euphoria, there is boom, there are excesses, and there is a slowdown. To your mind, how is this credit cycle different from the last credit cycle? Because the last credit cycle, when it started, sir, looked great. But by the time it ended, it in a sense created trouble for the system.
So the last credit cycle was driven by the mistakes made by the system on the wholesale side of the business. And I think that a lot of deleveraging has happened. Almost every financial institution has deleveraged. The corporates have deleveraged. They've understood that their assets, the companies can get taken away if they make mistakes and do things, wrong things. This time, the risk could potentially flow on the retail side because that has continued to grow. We have not had a problem on the retail side for the longest period of time. There are parts of the customers out there who never or first time kind of credit takers. So potentially a cycle, if it was to play out, it could play out there. There you need to understand that the number of institutions who are lending on the retail side is very, very large. The banks who understand this business are taking risk on better quality customers. While there is a long tail which is being catered to by the NBFCs and the small banks and so on and so forth. So even if a retail cycle was to hit, I firmly believe that the long tail will get hit first and then only it will come to the banks. Yes, RBI has been quite vocal about the fact that the unsecured lending in the system is increasing. People need to be careful. They have obviously been very vocal about what the digital, some of the fintechs have been doing, and they've clamped down on it and so on and so forth. My view is that the kind of information which is available in the system, the kind of algorithms which the banks have developed over a period of time, the way they are able to reach the customers, the data which is available in those customers, does allow hopefully to catch the cycle much earlier than when actually it will lead to large losses. I think COVID is a good example of that. I think you were hit with COVID twice over the last 3 years. The banks were able to absorb that, not only absorb that, they have continued to grow during that period, and the system is still thriving. And they were unexpected shocks. So in that sense, already the kind of customers you have gone through 2 cycles of COVID. So we have to be watchful. We have to see and look at what your product mix is. But hopefully the larger banks who understand this business quite well will be the least impacted if, let's say, the financial system was going to be impacted tomorrow.
Traditional bank had 3 sources of income. Transaction, which is almost zero now. fee-based income where fintechs are challenging you, and the third in a sense was the lending business. Let's talk about the part B, the fee-based income. Given that fintechs are now challenging the entire structure and the commission structure, how will that change life for Axis Bank?
So yes, you will always have new players coming in who will challenge the incumbents, and invariably they will go after the so-called what they see as the juiciest parts of the business. Please understand that one, banks are not just sitting and allowing the fintechs to come in and take over the juiciest customers. We are also investing in the digital side of the business in a very, very big way, and I think as time progresses, fintechs will find it more and more difficult. Secondly, I think fintechs are also realizing that RBI has placed clear rules in terms of how they can and should engage with the customers. If they want to engage with the customers in a certain manner, there is a front door through which they need to come and take a license and then follow the norms of what the license are. You can't stay outside the financial system and get the benefit of this financial system for free. You need to play it in a certain way. That playing means that it requires higher costs because you need to serve the customer well. You need to, if the customer has a complaint, you need to cater to it. There are certain collection methods you need to use to be able to collect the money from the customers, which means you need to play the game in a certain way. So that's the second part. I mean, that fintechs is not just about going and making money. There are certain costs associated with it, which fintechs thought they don't have to incur when they entered the business. Again, here, if you look at, for example, the kind of investments we're making on the digital side, we believe that in many cases we will give run for the money to the fintechs because they are in direct competition with us. In many cases, it makes sense for us to actually partner with them because they become not only we can take products to the marketplace with them, which make more sense to the customer. In many cases, they become a front end for us to source customers. And there will be a scenario where in some cases we'll take stakes in some of those fintechs because we might never attack the set of customers they're attacking, and learn with them and work with them to ensure that they become successful. And if they become successful, we'll also become successful over a period of time. So you have to play an open architecture play where you compete, you partner, and you take stakes. And we're doing all of it.
So before we move to the part B of our interview, can I say that the fintech space is like a engineering marvel. It's like a Ferrari, but not fit for Indian roads. Indian roads still need a Alto, and that's what banks will provide.
No. There will be some fintechs which will be very successful. I don't want to say that fintechs no, they will in some cases become extremely successful and they will emerge as a clear competition for banks. But there will only that many fintechs who will be able to scale and play that game to that extent. But the Indian financial system is large enough to absorb quite a few fintechs, which will give, keep us honest, make us invest, make us think differently. And I think it's good for the overall banking system, and most importantly, it's great for the customer.
Has the bubble got pricked?
To some extent, yes. The valuations have gone down. The kind of capital they had to spend to acquire customers is no longer available to the extent it was available earlier. So yes, it's got pricked. The valuations have become more reasonable. I think the fintechs have realized they do need to make money somewhere. So they are becoming very focused on that. And it's good because at the end of the day, it's not just about customer acquisition. Ultimately, every business has to make money. Only then you can sustain the enterprise. So I think the focus has been brought back, which is good for the system.
Mr. Chaudhry, every time when we've spoken to the management and to the promoters of companies, they said, look, we don't look at the stock price. It is a function of market, and market is something which is based on sentiment, valuation, a lot of multiple factors, and we grant it to them. But for bankers, it's important to look at the stock price because that's how you raise capital. Do you look at your stock price every day?
No, I don't. I've learned the hard way. There's no point in looking at the stock price. Yes, obviously when you're growing and you're growing at a pace where you're consuming capital, you do need to raise stock price. In the 3.5 years I've been here, we have raised capital twice, 22,500 crores. That's not a small sum of money. We have just acquired Citi, paid 11,600 crores for it. And if we continue to grow at a certain pace, at some stage in the future, sometime we might have to raise capital. Don't see the need now, but sometime we might have to raise capital. So yes, in that sense, the stock price is important. In that sense, you want to raise it at the right time, at the right price, so that the existing shareholders also benefit. And you also give an opportunity to the new shareholders to make money if you leave some room for the stock price to grow. But no, definitely don't watch it every day.
The two fundamental changes which have happened for Axis Bank in last 5 years is you've taken the insurance business big and you've got the credit card business. Axis Bank 5 years ago was just a commercial bank with a small securities business, but now it's a full service bank. Was this intentional or this is something which you needed for survival?
No, it was intentional. I mean, the platform was already there. We had all these businesses, we had all the subsidiaries with the licenses. We were slightly late to the party as far as some of the, let's say, the businesses and the subsidiaries are concerned. And one of the elements of our GPS strategy was to scale up the subsidiaries. So when I came in, we were making about 300 crores of profit in the top, the four larger subsidiaries. It will, the number is, if you look at the run rate basis and analyze it, it's closer to 1,500 crores now. So in that sense, I think we've come a long way. We need to continue to scale some of those businesses. And yes, it does allow to bring almost every financial product to a customer, which is also being produced in-house by Axis Bank. So it does help. And one of the elements of our GPS strategy also was to talk about one Axis. So not only it's just about selling a product or a service to a customer, but bringing the entire group to a customer and not only getting a higher share of the wallet, but becoming more relevant to the customer because we can cater to all the needs of a customer. If you today, for example, look at the wholesale bank side of the business, there are only 4 or 5 banks in India today which can actually serve the needs of a customer end to end, from credit to working capital to term loans to wholesale banking products to raising equity, raising debt, banking the topmost, the management team and the promoter of the particular company you're talking about through our Burgundy private platform, mutual funds, securities, all of that. So, we are trying to take the entire institution to our customer. It has improved quite a bit. I think we have scope for further improvement, and that's what we're trying to build. And we'll continue to build that.
So if you have to become, let's say, you're already a formidable player, but if you have to become a giant player in all the segments you represent, credit growth, your market share 5-6%, you want to take it to 10%, even in the other businesses which you represent. For you to become 10%, which is this high watermark, what will it take?
Well, as I said, we don't have to do anything special. We just have to keep executing on what already exists. We have a clear vision on what the possibilities are, where the money can be made, where we can serve customers better. We have also, to ensure that we can differentiate in the marketplaces, picked up 3 big things which we say will make Axis Bank distinctive or Axis Group distinctive. We have taken a very, very large project internally on customer service, or what we call customer obsession, called Sparsh. We want to take our NPS scores to a completely different level than where we are today. And the reason we picked it up is we want the customer on the street to say, if you want customer experience, go to Axis Bank. Now, it's a long journey. We have started a journey almost 2 years back, and it will continue for the next at least 5 to 6 years. We also picked up Bharat Bank as an initiative, and the idea was not only to look at our RUSU markets, but also connect the ecosystem in these RUSU markets in a very different way than what some of the other financial institutions are looking for. We have also obviously putting disproportionate amount of money in this part of the business. Third is around digital bank. We are the first bank to actually set up a digital banking unit. We have more than 1,500 people now. Just to give you an example, for example, our mobile app today is rated 4.8 Google Play Store, 1.9 billion reviews, the highest rated mobile banking app in the world. So I think as you make these investments and as you have a clear vision, the data starts speaking for itself. So if we can get these elements right, and as I said, we have the platform, I have not said that we want 10% market share in credit, but this incremental market share will come through. Some data which is already available in front of us. We started a transformation project on our merchant acquisition business. Our market share in merchant acquisition business was 11% when we started it. Today it is 18.8%. We are the number 2 player. Our incremental market share is even more. And because we believe that this business was something we needed to look at differently, we spent a lot of time and energy in transforming the way business was being run, and the numbers are there to show. Private banking business, every bank has been trying forever. We started Burgundy Private in November 19, and look at where we are. And with Citibank acquisition, we have grown even bigger. So it's just about getting these pieces right, executing well, put the right management team and leadership there. And in a lot of our businesses, I'm seeing these seeds growing into small trees because we've done a good job.
So which are the businesses where you think you have the right to win? You would like to be 1, 2 or 3?
No, we have in each of our key businesses, we believe we have the right to win because we are such a large group and we have all the elements in place. So you mentioned credit cards business. Why did we acquire Citi? One of the reasons we acquired credit card business was to become and grow our ranking. Our overall book size in credit cards has gone up by 40%. Our spend share has gone up from 11 to 16%. We believe on the acquisition side on a month-to-month basis, we are number 1 or number 2 player now. So that's one business we want to grow. Burgundy Private is one business we want to grow. I think on the retail asset side, there are some specific elements which are very, very dear to us. If you look at the combination of mid-corporate what we call the SME business and the small business banking, our share of the overall loan book is already up to 20% because that's something which we focused on. We believe that's a business we can really rule in the marketplace. Bharat Bank we have talked to you about, customer obsession we have talked to you about, and customer obsession is a multiplicative factor which will feed to every business of ours. If people on the street say, go for customer experience to Axis, a wholesale customer wants it, a retail customer wants it, a SME customer, everyone wants it. Everyone wants a greater customer experience. So there are some of these transformation projects which we believe will feed into every business of ours. As I said, sky is the limit. We are not going to stop. Our aspirations are high. We want to keep pushing ourselves.
But I want to go back to that whole ranking aspect. Define ranking for me. Is it market cap? Is it profit? Is it customer satisfaction? What is that number for you?
So we, to translate that number into something people could relate to, actually said 18% ROE is what we want to aim for. 18% ROE was, we had never come even close to that number.
Exactly.
And you will see over the last couple of quarters, we have started hitting that number. Before you say it, yes, helped partly by the expansion we got on the.
Is that sustainable?
We intend to keep it sustainable. It is going to be a tough task. It's an aspirational number we put out there. But we believe and we know what elements we need to work on to sustain it at a certain level. Our net interest margins have helped us. We have had historical low credit costs. They will go up at some stage. So this rising credit costs have to be substituted with gain somewhere else. And we know where potentially we can gain, and we have to gain to keep it at the 18% level. Work is on.
There are a lot of benchmarks in which you are at par with the best banks in India. NIMS, for example, credit growth, even though on your book size, which is a reasonably large book size, credit growth is very impressive. But when it comes to cost, the numbers are not the best in the industry. Why is that?
Well, we have a historical context. If you look at our productivity of our branches, for example, it's not the highest in the industry. We have some work to do there. We also, if you look at the productivity of our sales force in general, it's slightly higher. It does happen when you are number 3 player and you have reached a certain level of scale, for the full scaling benefits have not come through. I think in some cases we were slightly behind on technology. We have caught up now, so those benefits start coming through us. Today, also, when you say, for example, a corporate salary franchise is weaker than some of the others, as we continue to gain market share there, have we reached a stage where business is coming to us because we are standing at the right place? I think we need to get to that place where we get our fair share because we're just standing. We're not there as yet. And I think once we get to that, our cost will look similar to others.
How far are you away from that point?
Oh, hopefully, let's see. It is only a couple of years, but only time will tell.
Still a couple of years?
Oh yes, it is a long haul. It's a big ship. For everyone, it's a big ship. And by the way, competition is not just standing there. We have tough competition, smart competition, and they are also doing their bit. I mean, they also hopefully are talking more about us than before. And when they talk more about us, they are reacting to some of the stuff which we are doing. They're not going to just sit there and allow us to take the market share away. So we have to work harder.
I go back to again a very basic question, which is that COVID was an eye-opener for us. The term I used was survival, then it became revival, and then a year ago it feels like a sugar rush. Is that sugar rush, both in terms of demand, credit growth, economic offtake, is that sugar rush behind us? Now are we in for normal years of growth?
I think we are in for normal years for growth because yes, COVID, there was a suppressed demand which did take off and it reflected in the GDP growth rate. It is hopefully going to normalize now. And from here on, depending on how India does and geopolitically how things play out, things will get normal. And frankly, we are in the risk-taking business, but at the same time, we are the risk management business also. We cannot allow the sugar rush to continue for too long because if we do, we will end up making the same mistakes what we've done in the past. I mean, I've said before that are we making the mistakes today which will lead to a problem 3 to 5 years down the line? We should keep asking ourselves this question. We do try to in Axis, and we believe that today we are not, but firstly time will tell. Secondly, you have to keep looking for things where things could go wrong. And that's part of the job of the management team, to keep asking themselves the question, is there something happening out there today which could lead to a problem tomorrow? And yeah, you have to keep obviously proactively managing it.
But has life really normalized for Axis Bank in real terms? I remember we had long engaging conversations during COVID. We were all sitting at home. Banks branches were half open. There were a 2-day week or a 3-day week. Now everything is normal. It's the same buzz and the same hum which is back. Have those lot of COVID assumptions been rebooted?
No, we did change quite a bit because of COVID. In June 21, we had announced that we will move to a 2-day roster week. We are not changed from that.
We're still following
Oh
that.
yeah, we're still following it. Yes, more people do end up coming in office because people do want face-to-face meetings. But if there is someone who does not have face-to-face meetings, can come to office only twice a week and it's all fine, because COVID did prove to us that it's not required that we will be present here just for the sake of being present here. So we have kept to that promise, though a lot of our employees initially did not believe it. We have not changed. Yes, this question keeps coming up that should we change that 2 to 3. We are still trying to look at the data and see what is telling us.
So you come to this office only twice a week?
No. Sometimes I end up coming more often, but I'm talking about the larger set. We also have more than 3,500 employees who have permanently shifted to home. We're not asking them to come to office at all. There is another set of employees, we call it gig employees, who are working on gig basis, sitting from anywhere in the country. So we have done some things and changed some things permanently. It's not just one time, and we will continue to build on that as we move forward. So yes, COVID has brought about a clear change in how we work.
Couple of last follow-up questions, and I'll not extend my interview beyond that. Walk us through a mega trend, and I'll take the clock back before you take it forward. 20 years ago, digital banking was a novelty. Now it is a necessity. 5 years from now, 10 years from now, what is that mega trend which you see will emerge in the banking sector, especially in India?
Well, one of the things two things we need to think about. One, while data is ubiquitous, it is not necessarily available at the right time to the right people. I think the way the government is going about it and the kind of platforms they've created, data will give you insights which are not available today. So it is not only about the fact that the data is available. I think the trend would be who can use data in the best possible form and shape, and what are the use cases you build with it. Whoever is able to do that will be the winner in the marketplace. Second, I think what AI seems to be telling us today is scary.
Too much of data, but?
Well, my worry is that a lot of the use cases will emerge and the hoopla around it in terms of what AI can do and what you really need to, potentially how you take it to the customer and how you use it, will lead to circumstances, situation where if you're not in it, there'll be a problem. If you're too much in it, it could also create a problem. So you need to watch how it plays out, but I would say that could be a huge mega trend. I recently read this article in New York Times about how a chatbot responded about trying to be independent and stuff like that. So some of the stuff is scary. A lot of people who understand some of these trends have written to US government saying that they need to control it. But it is a trend which does need to be watched out for. If you recall, a couple of years back, it was all about Meta and the Meta world. I mean, now I think that noise has died down a little bit. But that could be another trend which could emerge over a period of time. I don't know how the millennials, the future millennials will like to lead their lives. And the way the trends are emerging and how quickly they have emerged just tells you one thing, that we today don't even know what some of those mega trends could be which could change the life of how we live and how the banks have to react to it and manage their customers. So you just have to be ready for the tsunami. You need to be standing at the right place so you can manage that tsunami as and when it comes.
Okay, so this is not a tsunami, but more like a rapid fire question. I'll throw some names at you, some sentences at you, and you'll have to give me your reaction. And of course, this is something I've not discussed with Mr. Chaudhry, so this is going to be straight out of his gut. Aditya Puri.
World-class franchise builder.
Shaktikanta Das.
Strong, steady hand.
Infosys when you're managing Progeon.
Oh, one of the best times I had.
HDFC Life.
Another great innings for me, a lot of learning.
AxisBank, HDFC Life, Infosys, best stock to buy.
Obviously AxisBank. What else am I supposed to say?
AxisBank, what's the first thing that comes to your mind?
Thoroughly enjoying it, looking forward to more.
Extension? ChatGTP.
Interesting and worrisome.
When you're not thinking, what are you doing?
Oh, listening to music, reading books.
One book which you've read again and again.
No, I'm not there as yet, but I need to read a book again and again. No. Enough books to read.
Which is your all-time favorite book?
Rise and Fall of the Third Reich, because I think it gave me a very different perspective on what the World War was about. I used to be a great Osho fan, so a number of Osho books were quite revealing.
What's that one thing you think has been the most challenging time for you in your current tenure?
Well, I think the acquisition of Citi was quite challenging because we did it at a time when, firstly, we did it in a time frame which was shorter than what we had told the market. This institution has been around for 120 years, deal of a lifetime. We got 97% of employees to come and join us. The day one went extremely well. Looking forward to the next 12 months when we will transition the customers to AxisBank platform. Very, very complex deal, not difficult, complex deal. And I think I'm very happy that we have done a great job till now. I think half of it is over. The more important half is still to be done.
You know, I must share with the viewers that I've had the honor and pleasure of tracking Mr. Chaudhry's journey in 3 different stages. First with Infosys when we would interact in Bangalore, then HDFC Life where I would go to his office, and now Axis Bank. It's quite incredible the way Mr. Chaudhry in a sense has really championed some of these franchises, and some of them are really world-class in nature. So thank you so very much for joining us, and lovely to have you again on the show.
Pleasure.
Thank you very much.
Thank you, Nikunj. Thank you.